And we are live. Good afternoon, ladies and gentlemen. It's Carl Holman, Communications Manager at A&D Mortgage. We're here today for another outstanding webinar. Today, we're going to be joined by Steve Kiles. He's a partner at Mortgage Marketing Animals, and he's going to share with us the secrets on unlocking proven keys for success in the mortgage industry. So let's go ahead. So very quickly, sort of our ground rules. If you guys can mute your cell phones like I just did so that we don't get any interruptions during our webinar, that'll be wonderful. You'll have Steve's full attention. And then we've muted everyone's videos and phones or microphones. If you've got questions, type them into the Q&A panel on your left or right, wherever you've got it. And then we'll compile those questions towards the end, unless we get one that's super urgent that we feel we need to interrupt Steve, and he'll answer it then. I will go ahead and answer the first question, which is, will you receive a copy of this presentation and a recording? And yes, you will. You'll get it within the first 24 hours. All right. I'll introduce Steve in just a few minutes here. He is a partner with an organization that we've partnered with a few times called Mortgage Marketing Animals. They're one of the leading marketing firms in this industry. So we'll touch base with him in a second. I'll talk to you guys first a little bit about A&D Mortgage for those people who may be joining us and are not familiar with us. We are one of the top 10 lenders in the United States. Go check out Forbes magazine. They just posted something today announcing that. So we're pretty proud of that. We specialize in non-QM lending, but we're also very competitive in the government and conventional lending space. One of the reasons that we're a leader in the non-QM space is because we are partnered with a sister company called Imperial Fund. They help us securitize our mortgages on the secondary market. That gives us the ability and the flexibility to write our own underwriting guidelines, determine our own risk, and adapt our programs as needed for the marketplace. We've been in business for about 20 years. We're nationwide at this point. Just a few states where we don't have licenses and a few where the licenses are pending. And then if you're interested in doing business loans with us, you actually don't need a license in 40 states. So we are definitely one of the companies you should be working with if you're not. And Steve will give you some good tips in a few seconds here to tell you how you can generate business, and we'll say send it over to us. With that, Steve, why don't you introduce yourself, tell us a little bit about you and the Mortgage Marketing Animals and how you can help our brokers and other folks in the industry generate some business this year.
Yeah. Hey, well, Carl, thank you for the entire team. I just want to say welcome to everybody. In this 45 minutes, I'm really excited to share a little bit of what we've done this last 28 months to see growth. And I want to thank Carl and Aliana and the entire A&D Mortgage team. We just really appreciate partners and strategic partners like this. And so thank you for being here. Our goal is that you're going to walk out with something strategic and tactical to be able to walk away with. And so, Carl, I'm just going to jump in, man. So, hey, all right. First off, as we're getting started, I'd love for you, wherever you're logged in at, drop a note in the chat. Where are you logging in from? So where are we seeing you come in from? We'd love to see that. Always glad to have you here, a part of what we're doing. And so let me get started. Unlocking massive growth in 2024. And I wanted to share 7 keys, proven keys to success in what we did this last year to see growth in our group. And listen, here's one thing I wanted to do. So first off, a little bit about my story. So I've been in the business for 21 years, got in the business when I was 25 years old. I got licensed when I was 26. That means I'm 47 for anybody who's trying to count. And, you know, I wanted just to share a little bit about the story. I can remember growing up and I grew up in a lower income family, and I can remember my mom and dad were just hard workers. We didn't have much, but we knew how to work hard. And I can remember growing up, started working when I was 15 years old in the actually construction industry. We did concrete work and cement work, and got my first job when I was 15, and then did landscaping and lawn, and then started some entrepreneurial things. We did gold plating business. My brother and I owned a t-shirt printing business, and then we got into real estate in our 20s. And I'll never forget, Carl, one of the coolest things was this. We bought our first house with literally $6,000, and we borrowed it on credit and sold it a week later for 10. And man, I thought we hit the jackpot. So we were growing up, we made so little money, we qualified for food stamps, but I remember my dad was so proud, he wouldn't let us take the food stamps. And so, I just know what it's like to work hard, to have a vision and a dream, and to say, you know what? One day I'm going to do something. And in our 20s, we started buying and selling real estate. And one thing that happened, we partnered with somebody. And when we partnered with them, they misappropriated a ton of funds. We had about I don't know, $1.5 million in real estate at the age of 22 years old. And then we lost it all. We had 4 houses go into foreclosure. We ended up losing a ton of money, owed $250,000 in debt to banks and to our lines of credit. And, I just remember I was a musician. Also, I played music professionally since I was 15. And at that time, I was like, okay, what do I do, man? I don't know what I'm supposed to do with the rest of my life. And I can remember my wife and I were walking across Greens Bayou in Houston and just praying, okay, God, what do I do? I want to do something significant that makes a difference. And I'll never forget that was the moment I knew I was supposed to get into the mortgage business. And the funny thing is this, I didn't even know you spelled mortgage with 2 G's. I mean, I was like, I had no idea. I'm like, where's the other G in mortgage? And, that began a journey. I was 25. And remember, we're pulling ourselves out of a ton of debt, which we paid off within 10 years. But I'll never forget, I was newly married, dead broke, had been a musician the last several years, had been playing professionally since I was 15, making $250 a week trying to pay all of these debts back. And you know what? I ran into a guy who was in the mortgage business. And Carl, the first thing he said, I said, man, train me. I know this is a calling. I know that's what I'm supposed to do. And he said, no, I'm not going to do it. I don't want to train anybody. And I pursued him for 90 days, and he eventually said yes. And in the mornings, I would go work at his office. His office was so small, I didn't even have a chair or a desk. I would sit on the floor. I'd get there at 7:30. I'd work till about 12 or 1.
Mhm.
And then I'd go wait tables at a Mexican restaurant in Houston called Papacitas. Some of you in Houston may know what that is. But I would wait tables. And that's what I did for the first 9 months. I drove 45 minutes, sat on this guy's floor, listened to him in his business, learned the business, started processing his loans for free. I think my first year, I may have closed 12 transactions. It was a struggle and it was a challenge, but that was the beginning of something great. Because here's what I know: when you know that you're called to a business, it's not about ease or comfort. It's about, I'm going to do what it takes in order to accomplish the vision and what I'm called and created to do. And here's the interesting thing is, in 21 years, I very slowly grew. Back then, there wasn't a whole lot of coaching. There was people on the peripheral. Barry's been around a long time. There's been a lot of people that were influencers, but there wasn't a lot of organized coaching. And then probably 12 years ago, I got into an organized coaching group and began to be coached, and then left that organization 6 years later. And then for a couple of years, started a podcast. Many of you may know the Loan Officer Leadership Podcast. That was birthed out of a desire to make a difference in our industry and to help make it easier and tactical. I heard a lot of pontificating about, hey, these are great ideas, but I needed to know, what was the strategy? What do I wake up and do on Monday? What do I do on Tuesday? What do I do on Wednesday, Thursday? Here's the other thing. What do I say? Who do I call? How do I even know if I did enough? Because half the challenge of this industry, Carl, is you'll literally, it's like I work, 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 but you don't see the fruit of what you do for 90 days later. So it's
Mhm.
like, did I do enough? And so we began to see patterns. We began to see numbers. We began to realize, man, if you do X over this period of time, you'll get Z as a result. And what was so cool was I started a podcast. It's been 4.5 years ago. And here's what I did. I didn't know how to podcast. I just wanted to make a difference in doing that, which, by the way, was what's so interesting. I told myself, I don't care if it kills me, I'm going to podcast once a week for the next year. And what's interesting is the amount of downloads I got that whole first year, I now get in a day.
Wow.
And it goes back to the power of podcasting and doing something. But I'm not saying that's what it is for your business, but I want you to hear my story. In doing that, I met a guy named Carl White about
Hmm.
actually in March will be 3 years ago. I joined his team and partnered with him. We've got a handful of partners with the mortgage marketing animals and really have a passion to build a national team, a national sales team on
Hmm.
the mortgage side. So still in the mortgages while we have a coaching organization that helps thousands of loan officers across the country. So today, what I wanted to share was a little bit about the originating story.
Hmm.
And so, look, here's my journey. 21 years in the business. We're actually originating 22 in the business, 21 years licensed. And let me tell you what I did. So a couple of years, probably about 5 years ago, I'd made a shift to a company and was just working. They had a bad reputation in a market, and very quickly, in 14 months, we grew it from zero to over $100 million. And it was a bad reputation, not doing. I mean, they were good company, just not a lot of great presence. And then I'll never forget the podcast started taking off, and I said, "Man, I really have a desire and dream to have a virtual team across the country, going in the same direction, running the same play, doing the same activities so that we could produce the same results." And man, and I loved the leadership team there. And they just said, "Hey, we love you. We appreciate your value. It's just not available here." And that's when I knew, Carl, I had to make a move. For me personally, I couldn't let my potential be held back based on a company's value. So I said, "Look, I don't like to do it, but I'm going to shift." And I shifted. And so here's what we did. When I moved in 2000, what was it, 2021, I made the move. At the end of 2021, Carl, I started over. So I had built
Yeah.
this group in 14 months. I had originators, I had processors, I had teams. I mean, it was just really great. We were building something pretty great. Well, then I started over and I literally had to start over from zero. And that's what I want to share with you today is because looking back and saying, Steve, if I had to tell you, um, knowing what I know now, to start over, you're literally starting from zero. Here was a statistic I just came across. A published report was talking about the last 90 days. It looks back 90 days ago. What was the monthly volume fundings? Carl, shocking. 67% of loan originators 90 days ago funded one or less transactions the whole month. 21%
Wow.
funded 1.5 transactions, and only 12% did more than 2.5 transactions the entire month. And here's what it's
That's
showing is there's such a chasm between like, look, there's veterans who are on this call and there are newbies on this call. And both of you might be saying, "Look, I'm at that one or less, or I'm at 1.5." Or you
hmm
might be on the other end and you say, "Hey, I'm seeing great success. Keep doing that." But what I wanted to speak to was the 67% and the 21% that are doing less than 1.5%. Steve, what would you tell me, knowing 22 years in the business, 21 years originating, and literally over the last 28 months, here's what we did. When I started over, because of my non-compete, I didn't take any originators. All I took was my core team of 6, and none of them originated. And I got here, and 30 days later, I was down to 4. None of the 4 originated. It was only my team and I. And we started a journey and began to see good success. The first year, first 12 months, we were there. So we were there for 4 months transitioning. And then in the first 12 months, the first year, we did 182 units, 57,244,000. And then, Carl, this last year in 2023, when the industry was down over 40 to 50, and in some cases 60%, we grew 51%, and we did 392 units for 112,543,000 in volume. And one of the things that I say about that, it's not the units and volume that matter, it's the story that you can grow regardless of what industry, like industry environment we're in, whether it's thriving times or bad times. Your activity is what dictates the results, not what this industry is actually going through. And here's what I believe. You're talking about a poor kid who grew up in a family of 6, who qualified for food stamps, who was entrepreneurial and decided I was going to do what it took, got into the business because it was a calling, failed miserably at businesses before I got into this, and then began to see through hard work, faithfulness, commitment. Hey, you know what? We began to see success in locking arms with relationships like Carl and then also Carl at the Marketing Animals. And then all these relationships, what happens is if I can do it a 6-year college dropout, how do you do that? Like I went to college for 6 years and I ended up dropping out to help my dad try to save his failing restaurant. I never went back to school. It was like, hey, if I can do it, you can do it. And so here's what I want to do. I just want to share 7 quick keys that I think will help you in this next 30 minutes. And I would also love for you to do this as we're going through. If you've got something that you want to ask a question, something pops up, drop it in the chat. We're going to say 15 minutes at the end. We've already got a handful of questions that came in. And so I'd love to share or answer those questions for you. So here's number one. If I'm starting over and I'm one of the 67% or the 21%, or even if I'm the 12% and say, how do I rebuild my business right now? Number one, you got to commit. And I believe with everything in me, without a commitment, there's no possibility for success because commitment is the mainstay. It's what keeps you going whenever you don't feel like, hey, I don't know if I can keep going. And here's the couple of parts you got to know. Like most of you have a goal, and I hope y'all brought a notepad every time. I don't know if you could see it, but I've got my notepad sitting right here. And every time you're at something like this, my challenge to you is this: grab a notepad, take notes, or in this case, even jot down, like don't show up to something where you're not taking away at least one thing to implement in your business. Here's the one thing I want you to ask yourself: why do I do what I do? You know, when I know my why, it leans into a resolve. Like for some of you, it may be, hey, I want to get back up to, and I'll use this example. I've talked to a number of loan officers every week. I probably talk to no fewer than 15 to 20 in scheduled calls. And I would tell you this, I hear this all the time. Hey, I just want to get back up to $30,000 a month. I want to get back into making 35, 40,000. And what I hear is that's a number. And I think it's a great part of your why. But number one is, why do you want to make? So write down this. How much money are you trying to make per month? Because we all work to reap a financial reward, which gives us something. And without knowing what that something is, a number like $30,000 isn't enough when it gets tough. And I don't know about you guys, and maybe even drop it in the chat. Carl, can we see their chats if they drop them or no? Like I would even drop in the chat, what's something like, what's your number? What's your why? What's the one thing? Like, here's what I think about it. When I start with a number, which is a great place to start. Okay. And let's just use $30,000 a month as a number. I want to get to $30,000 a month. Here's what I want you to know or write down: why. Take like 15 seconds and write down, what does that money do for you? You know, like for me, it helps my kids go to a private school. It helps us be able to have the freedom and make the memories that I know are so important for our lives. It allows me to have an overflow of resource that I can make a difference in the lives of the people that we're around, whether that's family and friends, our church, our relationships, your synagogue, your organizations. What does that amount of money equate to? And I would say, why? You know, for some of you, I was talking to somebody earlier this week and it was like, I want to make X dollars a month because when I do that, Carl, it lets my wife stay home. And if my wife can stay home, we want to have 2 more kids. That's a real why. And until you know your why, the pain of the challenges this industry will bring you, they're going to overtake you unless you've got something you're standing firm on. The second thing is this: is you got to resolve. A resolve to me is this. Like a resolve is, and you can't see my whole body, but it's like a resolve is I'm a fighting too. Once I know my why, I can't come off my why because I'm now planted in a resolve. And it goes back to like when I started the podcast or even whenever I started this team, I've got a big 10-year why. I know why I want to do what I do so that I can help loan officers achieve a life of freedom utilizing the strategy and structure that we already know has proven results. And when I've got a resolve, it doesn't matter what the day pushes at me. It doesn't matter what comes to me because I'm not affected about the external. I'm affected by the internal of my why, which is so much bigger than any circumstance. And here's the other thing I think that was critical. Carl, I remember when I got in the business, I was 25, newly married, dead broke. Four houses had went into foreclosure. We were able to pull them all out. I owed a ton of money, and I had no idea how much money you could make in this business. But here's what I knew. It was a calling. I was created to make a difference in the lives of the families, the realtors, the partners, the loan officers, the branch managers that we served. I knew that this is what I was going to give my life for, to make a difference. And that created a resolve. And I think the bigger thing is, how many on this call have had a plan B? And I think when you have a plan B, the challenge with that is there's a way out. There's always a way out. And I'll never forget when my wife and I got married. My amazing wife, we literally have been married 21 years. And this is something that we say and have said often over the 21 years. There's never a way out, only a way through. Let me say that again. There's never a way out. There's only a way through. And the reason why I say that is because when you know your why, when there's a resolve and there's no plan B, I look at this industry and say, it doesn't matter if purchase volume is down. It doesn't matter if rates hit 8%. It doesn't matter if I lost my last 3 deals and I got nothing in the pipeline. Then I better fix whatever's going on quickly, because there's no plan B. And when you have a stance like that, it's totally different, because I'm not affected by what comes at me. The only solution is through, not out. So the biggest thing is, in this, we've got to make sure that we've got to commit to doing it and being in this industry. Here's the next thing. We got to execute a proven plan. Look, and it's not your fault. And I wish, I was talking to somebody the other day and I was like, I wish I would have known this 22 years ago. I'm telling you this, we would have been so much further. But you didn't know the power of theme days. We didn't know how to go after qualified agents. We didn't even know what a qualified agent was and the importance of going after the right agents. We didn't know what to do on Tuesday, where we're doing our Just Ask Tuesday updates. And in those updates, being strategic with asking for the business. I didn't know that Wednesday was a focus for database, and that literally every 100 people in my database, I can convert 1 to 2 closings a month if I'll market them consistently. I didn't know Thursday should be pre-approved and looking days, where we're literally getting ahead of the conversation before they go look at properties, so that when it comes back in, I don't lose it to a rate shopper. And I didn't know about touching the lead, touching the partner. I didn't know any of that. So it's not your fault. But here's what's really cool is that through our partnership with Carl and A&D Mortgage, you guys are being introduced to the mortgage marketing animals, and we got a great plan to help you. And it's exactly what we implemented to see $112,543,000 in my personal team that I'm growing across the country. Like, literally, it's exactly the same plan that helped us grow 51%. So in doing a plan is this. I think the two biggest things you got to know are this. If you were to say, hey, Steve, what is the biggest thing? Like, what do I have to know going into this year? And in 2024, I would tell you this. It's two things. You got to hone in on realtors, and you got to hone in on your past clients and database. And some of you may be brand new. And if you don't have past clients, write the word sphere of influence. Your sphere of influence will convert almost as good as your past client database if you'll follow a plan. So here's the thing. In number 2, executing a plan with proven results, you got to know your numbers. And I'm going to walk you through something real quick that'll help you know your numbers actually pretty quick. Number 1 is this. Carl, me and Carl White over at the Marketing Animals were talking about, hey, what's the lesson we learned in the last 12 months? And I'll tell you, one of the biggest lessons we learned was this: the power of the qualified agent. See, look, some of you on the call, you've got relationships, and you've been in the business 5, 10, 15 years, and you may have 30 or 40 agents, and you're sitting here saying, man, I don't know why I'm not getting the business I got last year. And I'll tell you why. Because out of 1.6 million agents across the country, 96% of them, write that down, 96% did less than 10 total transactions. Only 4% did 8 or more buy-side transactions, 4%. So for every 100 agents you line up, if I brought 100 realtors in this room, here's what I have to know. 96 of them I may like, know, trust. I may want to hang out with them. We may get along. I've done business with them in the past. The problem is they don't do enough business to send it your way. Yet we're investing time, energy, effort, money, lunch and learns, happy hours. We're going to their company trainings and teachings, and we're saying, man, I'm doing all this activity. I'm busy, Carl, but I don't know why I'm not getting the business. And one of the greatest things is it's not busy, it's effective. That's another lesson I'd write down. Busyness will make you broke. Effective will make you rich. And here's the thing is this, the power of the qualified agent relationships, you got to write down how many of them do you have. So if you go back and look at all the agents you currently are working with, look up on one of the resources where you can look up their numbers. And I'll tell you this, you'll be shocked. Let me tell you something about Sarah, one of the people who's on my team that produces our production team. She had 29 qualified agents 6 months ago that she had met with, built relationships with, were actively referring her business. And then we started seeing the volume of leads come down. And I said, Sarah, let's go back and see how many of those are qualified. And will you believe it? It's like less than 10. Like I want to say it was like 8 or 9. And we're only talking about 6 months ago.
Yeah.
And what we found is if you're watching your leads go down, but your agent relationships are the same, it's probably because they're losing or don't have the business. See, last year was tough on agents too, and people that were qualified or barely qualified, they're not qualified. You're seeing the chasm even bigger than it was. The agents that have a process to prospecting is what I call it, are thriving because why? They're doing the same thing Monday, Tuesday, Wednesday, Thursday, Friday. The ones who don't have a process to prospecting, they were getting the peripheral deals because rates were low, value on homes were good, the right inventory hit the market. The mix of the market was the gift they got. But without a process to running our business, just like agents, they began to lose business. So let me give you an example. For every qualified agent you have currently, you should see about 2 relational leads a month. Now, I'm not talking about sync leads or Zillow leads or internet leads. We're talking about relationally referred leads. And so if I got 10 qualified agents, I should be seeing about 20, maybe 25 relational leads. And here's what we know too. You'll close 1 in 4 relational leads. So if I've got 24 relational leads, that's about 6 fundings.
6.
And if somebody is doing less than that, we see a range of about 18% to 31% is probably where it's at. If you're lower than 25%, you just got to work on your conversion. And that's where coaching and things like the marketing animals can help. If you're greater than 25%, don't change anything, keep doing it. But that's where it's a predictable income because if I get 24 relational leads, I should put 6 fundable loans in my pipeline. And if I'm not, then something's amiss. And that's how it's predictable. So number one is qualified agent relationships. You got to have them. Let me tell you this. Out of the question was asked this, a national survey, how did you find your loan officer? And Carl, 35% of the respondents said I found it through a realtor relationship. 35%. And here's what's crazy.
Sounds
This
about
is
right.
why database is the next one. The next highest was database, and it was 27%. So 62% of every respondent on the survey said, I found my loan officer from a friend or family or from my realtor partner.
Yep.
That's it. Hey, do you know that social media, which is the biggest push right now? Listen, we do a lot in social with the marketing analysts. We got all the widgets and AI powered CRM. We got some really cool stuff. But let me just be real blunt with everybody. Do you know where social media landed on this survey? Guess maybe
Close to dead last.
third. It was 3%. 3% of people found their loan officer on social media. Now, I think social media is important to be top of mind, to remember people. I think it's great, but it's not the focus. It is the phone, it's relationship, belly to belly, face to face. It's building authentic, meaningful relationships with people who have the ability to refer you business. Let me tell you this too. You may have an agent, and I'm gonna move on to the next one, but let me just hone in on this. Probably the biggest aha from last year was you got to work with qualified agents. Because look, somebody who does 4 buyer side transactions a year, and Carl, they love you. I mean, they've known you. I've got a bunch of them. I've got over 100 that I've worked with. I mean, that literally we call them unqualified agents, and we have a process to prospect them, which is high time, high touch. I mean, high touch, high tech, low time. So I don't want to spend a lot of time with them, but I want to stay top of mind because here's what happens. Over the course of the year, let's say they closed 6 total transactions, 4 were buy side. How many can they refer? Well, we already know the math, it's half. So half of them will come in with their own loan officer relationship, half of them will pay cash, half of them,
Mhm.
they don't need financing, but the other half can be referred. So out of four, I get a shot at two. And if I know I close one out of four, the question is, will I close it this year or next year?
Hmm.
2 years is too long to wait or to prospect to get a deal. It's just not enough. You got to be going after agents and building relationships with people that are doing a lot more transactions for the buy side. Here's the second thing, database. Database is a gold mine right now because look, the people in your database have already worked with you. They know you, they like you, they trust you. For every 100 in your database, we're seeing 1 to 2 fundings a month for every 100. So the question is, write this down. How many do you have in your database? Hey, somebody who has 200, if you're marketing your database right, which is a call quarterly, which is a monthly mailer, which is periodic text and a weekly updated newsletter via email, you're going to see 1 to 2 out of 100. So somebody who has 200 in their past client database, in a matter of 90 to 120 days of following that simple process we do on Wednesdays, can get an extra 2 to 4 transactions a month. And if somebody's averaging 3,000 in revenue per loan, you're talking about, I mean, anywhere from $6,000 to $12,000 or more a month just by being intentional with your database. So if I got a time issue, and I'm trying to do it in 32 or 40 hours a week, then the two I'm focusing on is what brings me 67% of my results.
Yep.
So here's the thing. Let me walk you through something real quick. I think it'll help you. Very, very simple. How to execute on a day-to-day basis. You got to know your number of leads needed per day. I do something called it's a 12-week boot camp, and I've got my first class of people. I'm taking through it right now. And this is the number one breakthrough aha that I think they're having is this. If I know how many relational leads I need a day, I can literally transform my business. So here's what I want you to do. If you'll notice here, what's your income goal? So I'm going to use that same $30,000 a month. And I'm going to say that at $30,000 a month, I'm averaging $3,000 in revenue. And look, some of you may be more, some of you may be less. Let's just say it's a $300,000 loan average. I'm making 100 bips, whatever it is, doesn't even matter. Income 30,000. I'm making $3,000 a loan. The question is, how many fundings a month do I need? Well, I need 10. And then look, what you do is you take, if I need 10, how many relational leads do you need a month? I need 4 for every one, right? So if I need 10 fundings, then my goal is to get to 40 relational leads a month. So here's the question is, how many leads do I need a day? Because, whenever I think about this, I sit here and I think, okay, break 40 down. Like 40 is too big. I just need to know what I got to do today. When I walk in today, what do I need? Well, here's how you do it. 40 leads divided by 20. So let's just say there's 5 business days in a week. And we know on average there's 4 weeks in a month. And yes, I know some have more, some have less. I think the actual number is 21.33 to be
Yeah.
exact. But I'm going to say 20 business days in a month. Here's your number. So when we're talking about executing a plan, Carl, here's half of what I ask my team all the time. Hey, how many leads you need today? I need 2. Cool. How many you got? 1. Awesome. What are you going to do to get the other one? Well, I'm going to make more calls, build more relationships, ask for more business. Awesome. How many times are you going to do it? I don't know, as much as it takes. I would agree. That's it. All I got to do is get my 2 leads a day. And when we break down 2 leads a day equals 10 fundings a month, like mind blown how simple that is, because now I've got an actionable plan that I have enough talk tos. I ask for the business enough so that I get 2 relational leads a day. One day I may get 4, one day I may get none, but it needs to be 10 a week, and that'll be 40 a month with a conversion of 25%, which is what we see on average. And if it's lower, work on conversion. If it's higher, high five yourself and celebrate the gain. Here's the other thing too. You got to measure your talk tos. How many times are you asking for the business? Because look, I hear a lot of times people say, man, I'm making the calls, but I'm not getting the business. And I ask them, how are you asking for the business? Well, I'm not. They know I'm a loan officer. They know what I do. They should give me the business. And I got to tell you, it's just not how it works. The 3 scripts we use right here, and if I were anybody on this call, I would screenshot these. You memorize these 3 design conversations and you put it into your everyday conversation. You will be blown away with how many relational leads you get simply by asking. So we're talking to agent partners. One of the things we're doing Because we're literally saying, hey, Carl, who do you have today that I could help you get pre-approved to make sure it's a great use of your time? That's it. Hey, I talked to my realtor partner. They gave me a lead. I touched the lead and I'm calling the agent to give them an update. Hey, Brandon, Steve Kyles, what's up, my man? Wanted to give you a quick update on Mr. Smith. He's completing the application. We got our loan consultation scheduled for tomorrow at 2. I'm excited. As soon as we're done with that, I'll call you with a full update as to where we're at in the process. Hey, before I let you go, let me ask you this. Hey, Brandon, who do you have today that I could help you get pre-approved to make sure it's a good use of your time? That's it. Oh man, no, I don't have any. All right, well, when you do, send them to me. Let's get them pre-approved as well. Or, hey, you know what? I just ran into somebody at an open house. Call so-and-so. It is a very simple, non-intrusive, very direct way to say, give me more business, because in doing that, I'm going to help you get to the closing table more and make you even more money. Here's number 2. I'm a student of success. I'd love to hear your story. Some of you today are going to need to go back or reach out to qualified agents you don't currently know. And some people would say, yeah, that's cold calling. I hate cold calling. Well, let me tell you this, when 35% of the business nationally comes from a realtor partner, I better get used to either cold calling or finding warm relationships that I can make, or try to figure out how to do it in lower buckets that produce less results. The name of the game is not busy, but effective.
Mhm.
So here's the thing. I love this. It's a very simple way. And many of you have agents that were on the listing side or agents over the last 3 to 5 years that are qualified. You just lost touch with. Call them up. Hey, man. Hey, Lisa, Steve Kyles. What's up, girl? Hey, I'm a student of success. Man, I'd love to hear your story. I was checking out your numbers and noticed you did 35 buy-side transactions. Girl, in today's market, you are killing it. And I got to hear what you're doing. I'm a student of success, and man, I would give anything to be able to have a quick 15-minute coffee or a Zoom call or a phone call that's scheduled where I can learn more about what you're doing. And it's a very cool way to get in front of producers. Listen, what's the greatest topic people like to talk about? Themselves. So it's a great script or design conversation to open the door on somebody who's warm or cold so that you can build more authentic relationships. Here's number 3. The 3x3 is what we call it. Every time we're talking to a client, can I count on you to give me a call when a friend, family, or coworker is looking to buy, sell, or refinance? At the end of every client call we have, you got to say it. It's got to be a part of your vernacular, your conversation. Because look, we assume if they had somebody, they would let us know. Well, the truth is, now that they're in the middle of the process, they're more aware of others around them that are interested in getting back into the real estate process. So
Mhm.
that's where it's like, hey, can I count on you to give me a call when you have a friend, family, or coworker looking to buy, sell, or refinance? Man, I'd love to help another great family just like you, Carl. And asking that question will yield you massive results. So good stuff. And when I say good stuff, you say great stuff, everybody. Good stuff. All
Great
right.
stuff.
All right. Hey, calendar your plan. Here's the next thing. I think that your calendar is absolutely critical. Your calendar is what determines, I think, the success of your day. If it's not in your calendar, we always say it's not real. And I love what Benjamin Franklin said. He said, if we take care of the minutes, the years will take care of themselves. And that's about stewardship. Look, I will tell you this, I've learned to get more done in 32 hours than most people get done in 2 weeks. And it's because from 7:30 to 4:30, Monday through Thursday, every single 30 minutes of my day is planned out to achieve my objective and my goal. And some of you may say, well, I can't live that way. Well, you'd be surprised that your calendar actually provides relief, because when I wake up and know that it's already set what I've got to do, there's no question about showing up. My calendar tells me what to do. I love what Craig Groeschel says. We prioritize what matters most. Here's a real simple time block that we use across my teams. 8 to 9, we do team meetings and set up the day. 9 to 11 is when we do our outbound sales calls and prospecting. Now, do not hear the word cold calls. We very, very seldom, if ever, do cold calls. We're making outbound warm relationship calls based on these themes. So Mondays, we call them our Focus 40 realtors that are partners with us. And Mondays are our agent days. We call it Thor's Hammer. And that's the day focused on realtor relationships, people we've met with, or people we're going after. Tuesdays are Just Ask. That's where we're doing our Tuesday update. We used to call it Tuesday Update, but the real point of the call is to ask for the business. We give them an update. Hey, listen, Carl, Steve, just want to give you a quick Tuesday update before noon. Man, excited about the progress we're making on your loan. It's been submitted to underwriting. Everything is on track. for a smooth and flawless closing. Hey, before I let you go, could I ask you a quick favor, man? Can I count on you that when you have a friend, family, coworker looking to buy, sell, or refinance, that you would give us the opportunity to work with another great family just like you? That's it. Purpose of the call, ask for the business. Wednesday's database, Thursday's pre-approved and looking, Fridays we work on our business. So very, very simple, 9 to 11 outbound sales activity. Those 8 hours a week will make you rich. I promise you that, if you'll focus on them. 11 to 2, we do lunches, coffees, appointments, social media, videos. Whatever you've got, you can do. 2 to 4, we do loan consultations, mortgage refreshes, lock-in calls. And then from 4 to 5, we wrap up the day and follow-ups. And so here's what it looks like in a calendar. Very, very simple, with the goal of being in green time as much as we can possibly be. All right, good stuff.
Mm.
Here's the next one. Do what it takes. I just think doing what it takes goes back to that resolve. When I think about doing what it takes, it's a mindset. It's not, I'm going to show up and I hope I get it done. You talk to a lot of people, and myself included. I used to say this all the time, man, I'm trying my best. I'm doing the best I can. And what we began to replace that with is, no, I'm doing what it takes. Why? Because doing what it takes is a different mindset. It's a different mentality. It's showing up and saying, you know what? Look, if I got a problem to solve and I say I'm going to do my best, I show up differently than whenever I show up and say, I'm doing what it takes.
Yeah.
It was so funny. True story. I'm at my lake house this week. We're on our winter break, and I walked in, and one of my toilets has a leak in it. It's so funny. So my first thought is, man, I'm going to call the handyman, because we Airbnb it out when we're not here. And Carl, it was so funny. I just thought, no, I'm going to do whatever it takes to fix this stupid toilet. And you know what? I fixed it. This
Braver man than I.
non-candy. I know, man, you talk about celebration. My wife's like all jumping up and down, like, he did it, he did it. I'm just not a handy guy. But it's so funny. It's like, I'm gonna do whatever it takes. I mean, you just show up different when you do what it takes. And here's the thing: resources follow visions and results. There are resources that are near you that are being underutilized. Let me tell you one thing. When we got started, I started with 6 of us, and then dropped down to 4. And we started over, man. It was literally from zero, not one resource. I was at a brand new place. I didn't know anybody. I just had a real vision, and I knew I had a dream in my heart that we could build something that helped loan officers achieve their goals. And for me, it was like, okay, I got this dream, I got a vision, I know what I'm called to do. And it was amazing, Carl, when I started talking about the dream, when I started talking about what we're hoping to accomplish, when I started talking about what would be needed to see that, like, hey, we're going to need to be able to recruit great loan processors and pre-approval specialists and attract great talent. The resources will follow visions. Like, what happened was people were saying, you know what, hey, our marketing department can help you with this because, hey, they got a little bit of bandwidth and you need this, well, we'll do that. And hey, our HR team can help you identify the right candidates. How many do you need? And it was amazing, because if I'd have walked in and said, man, I don't know how I'm going to do it. I just can't. With me and my 4, how are we going to start building something of significant? I was the only producer at that time. And it was like, man, how are we going to do it? But instead I walked in and said, no, I got a dream. You know what? I've got a big why. I'm set a resolve. I'm going to do what it takes. And it's amazing, at your companies where you're currently at, there are resources that are being underutilized, whether it's marketing, whether it's IT, whether it's HR, whether it's training. We had a big challenge. It was like, as people start onboarding, who's going to train them? I can't. I don't have time. I'm trying to continue to grow the team and lead the team. And it was amazing. Somebody who was really good at training stepped in and said, I can do that. And we saw all of these resources begin to come to us, as we cast vision and started taking action. So I really want to challenge you, regardless of where you're at, your vision will draw in the right resources, and you can do it. So, all right, here's the next one. Number 5, you got to show up every day. And I think that's a big part, like even with your calendar, showing up every day. It goes back to the resolve of, yeah, it goes back to the resolve of, you know what, when I show up every single day, and a lot of that is my calendar's telling me what I'm doing. That's why I think the calendar is so important. But when I show up every day, it's not like, regardless of whether I got sick kids. So I'll give you another example, Carl. Last week, every one of my kids got sick. And every day last week, every one of my kids was home. And I could have said, man, this is going to wreck my day. And not in a negative way, but just say, hey, I can't do what matters most because I got sick kids.
Mhm.
And listen, and I'm not saying you can't when you have sick kids, but my mentality was, you know what? Hey, Ethan, I know you're not feeling well. So what I'm going to do is I'm going to check on you in between these appointments. My calendar is already set, and you're not dying. You're not going to the hospital. You're just sick. You got a fever. It's okay. But I'm going to, with compassion, nurture him in between showing up, even though it's not convenient.
Mhm.
And I think it goes back to the resolve of, look, when I got a calendar that tells me what I need to do because it's built around my goals, built around my dreams. Some of you, you do good this year to write down this. What do I need to stop doing? Some of you are doing things that provide or give you no results. It's busy work. I'm chasing conditions. I'm filing, getting bank statements. I'm working on closing. I'm talking to the title company. Who on your team can do that? That's one of the greatest questions I ask. Who can do this? Because if I'm not selling, our team is not growing and we're not making money. And
Mhm.
in showing up every day, here's the reality. I love this. A friend of mine, Richard Smith, showed me this, and I thought, dude, this is it. So many times you got to show up every day because our expectation, Carl, is that growth is this linear curve. Like it's going to just be, man, this month I started at zero. I'm doing the right activities, started over again, and now I get to one, two, three, four, five, six, and it's this easy trajectory. Well, listen, let me tell you this. Kenneth on my team, she's been with me 11 months this month. And I'll tell you, in November, December, she was averaging, I think, 2 loans a month, really been buckling down on doing the right activity. She's funding 10 loans this month, locked in already. Today is the 20th of February. She's already locked in 8 loans. She'll break double digits next month and is showing no signs of backing down because here's what happened is she went from one to two, 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 three, four, 10. Like that's the trajectory. And what she could have done was in October, whenever she was rebuilding her business like everybody else was, all of us were, is she could have said, well, I'm not seeing the results in October. I'm not seeing the results in November. December, not much more in results. January, she finally broke through, I think it was like 8 locks, which ended up with 10 fundings in February. And she'll break literally double digits, like breaking 10, getting probably 11, 12, or 13 in March. And
There
it
you go.
just goes back to, if you don't know that this is how it really works, you'll give up because you're expecting trajectory growth as opposed to what we call fishhook growth.
Mhm.
Right activity, in about 90 days, you'll explode. And that's the way it works. All right. Greatest predictor of your future are your daily actions. I love that. Discipline is choosing what you want most over what you want now. That talks about showing up every day. Hey, here's another one. Be accountable. Be accountable to your dreams and your goals. And what I've learned is you can't do it alone. Accountability is not a consequence, but it's ownership. When I used to think about accountability, Carl, it was something negative. It was like this big stick, and it was some mean person going to beat you down if you didn't do it. And what I learned is this: it's a life trait, it's a life stance. Accountability is a willingness to own my own actions, regardless of the circumstance. It's part of how did we grow 51% in the worst mortgage market? Because we were accountable. I'm accountable to my team. I'm accountable to my coach. I'm accountable to this industry. And what that means is it's a life stance. Hey, listen, if you see something that I can do to get better, further, more results, tell me. I want to get better, not you better make these calls. You better do 2 hours of prospecting. You better do insert in. That's a negative. Accountability is really a treasure. Here's the last one. Don't quit. My biggest encouragement is this: when there's no plan B, if you'll get with a tribe of people that are going in the same direction with the same vision, same values, same beliefs, you'll begin to have that strength. Look, I remember several years ago, probably 3 or 4 years ago now, I went through a tough year. It was a tough year. And I'll never forget the two lessons I learned in that tough year because I didn't advance, but I didn't lose ground. And I'll never forget this. I was telling somebody, in a tough year, in a tough season, if you'll live clean and you'll live close, it gives you the strength to not quit.
Mm.
And I think that that's so powerful. How do I live in a way that's clean? I don't got a bunch of junk in my life that I got to fight through. And how do I live close to a community, two or three, four relationships that encourage me when I'm discouraged? And if you can do those two things, regardless of whether you're coming out of your best year, a challenging year, or your worst year, if you don't quit, you can have massive success. I love this. Thomas Edison said, if we did the things we were capable of doing, we would literally astound ourselves. Here's the 7 things: commit, execute, calendar your plan, do what it takes, show up every day, be accountable, and then don't quit. One last thing. Hey, for those of you who are joining us today, I'd love to invite you on a journey. You may say, well, hey, I don't have a tribe. I don't have a group of people that I'm really in relationship. The Loan Officer Breakfast Club is something we do at the Marketing Animals. It's our gift to the industry. We've got over 18,000 loan officers that have joined the Loan Officer Breakfast Club. And one of the things we do is every Monday through Thursday from literally from 8:30 to 9 a.m. Eastern, several hundred, like anywhere from 300 to 500 loan officers from all over the country, all different companies like brokers, bankers, independents, it doesn't matter. What we're talking about are the activities that are helping you move the needle the most. And if you'll do this, I don't know if you can see my phone, but do a QR code. So QR code this thing, and it'll come right up. So put it up on the screen, and that'll take you straight to the Loan Officer Breakfast Club. We'd love to be a part of your story. We'd love for you to join the community. And really, it's just a great way to link arms with people moving in the same direction. So,
That's
Carl,
great.
I hope
That's
that's
great.
it.
Yeah, yeah. And again, we'll be sending out the presentation, so if they can't get a screen grab of anything yet, they'll have it in 24 hours. So they'll be in time for your next breakfast. Um, so let's jump over to some of the questions that we've gotten in advance, and then I'll do a quick wrap up.
Yeah.
So we had a couple questions submitted to you in advance. One from Jim Haley, who wants to know, how can he connect with referral partners? Got
Yeah.
any tips on that?
Yeah, so here's what I would do. Number one, and probably referral partners are going to be the agents. That again, they're the largest part of the market for sure. Here's what I would do. Every Monday from 9 to 11, I would put that as my realtor relationship time. And what you're doing is I would look at every realtor that you've worked with in the last 3 to 5 years. And you may say, Steve, that's a long ways back, but I would tell you if they've been on the listing side or they've been on your buy side, I would make a list. And then what I would do is I would organize them based on who does more than 8 buy side transactions right now. And then on Mondays from 9 to 11, make your outbound calls. If you're really familiar with them, just rework the relationship. So one of the things is we always say, hey, Carl, it's Steve Kyles. I know we haven't done business in several years. I was thinking about you this week. My gosh, I saw your numbers. You did 24 buy side transactions. Brother, I'm a student of success and I'd love to hear your story, man. What can we do to be able to grab a 15-minute coffee? I'd love to hear how you've grown your business so much in one of the worst environments we've ever seen. So it goes back to that one of 3 scripts. I'm a student of success. I'd love to hear your story. Carl, it's hard for people to say no. Like it just is. And when you're making the calls, you may talk to 10 and only 5 say, yes, I'll meet you. But
Still
realize
50%.
this. Yeah, if you meet 5 and then you follow up for the next 12 weeks, every Monday from 9 to 11, you just check in with them. Carl, Steve Kyle's doing my Monday check-in, wanted to see how you're doing. Do you work or you play? For 12 weeks, we found around week 6, they start referring. And over the course of 12 weeks, you'll get 2 to 3 of those 10 that you met with start actively referring you business. So it takes about 90 days. But the plan is Mondays, 9 to 11, I call qualified agents, those I know, those I've worked with, and maybe some new ones I want to go after. And it's either, hey, I know you, great to see you, how's it going? Or it's, I'm a student of success, I'd love to hear your story. So hopefully that'll help you.
Yeah, yeah, yeah. And it kind of segues into the next question a little bit from Carlos. Carlos, I do see have your hand raised, so I'm not sure if this is what you were going to ask us about. If you got a second question, go ahead and put it in the Q&A. But Carlos was wondering about how many hours a week do you need to kind of set aside to achieve the massive growth that you're talking
Yeah, here's
about?
what's shocking, Carl. It's 8 hours. If you'll prospect 2 hours a day, Monday through Thursday, you'll see, like, I'll tell you this, the people that do that faithfully are people that are doing 2 comma. We call that make over $1 million in W-2 income. I mean, we think it's a lot. The reality is you can make 100 outbound calls in 2 hours. And when you're doing that 4 days a week consistently over a year, it is absolutely mind-blowing the amount of business you'll begin to get. And people say, well, why don't you use social? I still post on social. We all like we use some of those tools, but you got to realize the cheapest, most effective form of communication right now is the telephone.
Yep. Yeah, and there's an old rule in marketing that's it's cheaper to market to the people you know and that you've already done business with than it is to go out and find new people.
That's it.
And we've got a question here from Hugo who wants to know if you still take new clients to be coached personally.
Yeah. Hey, listen, I'll tell you this. We do. So right now I personally coach the people that I'm growing. I'm a executive sales leader in our mortgage team. But I'll tell you this, I'm doing something right now we're piloting, and it's a 12-week boot camp. I've got my first class of people that are in it. And we're keeping it to small groups, and seeing massive success. So that's the thing that where I'm doing the coaching in personally. And I would tell you this, if you're interested in that, look, there's a handful of people. Send me an email, steve@stevekiles.com, and I'll be happy. I mean, here's what we do. We take 20 candidates who want to do a 12-week boot camp that are committed to do the work and want to get to 5 more fundings a month. So it's how do I grow my business $1 million more a month in 90 days? And that's what the 12-week boot camp is. So I love the question. You could send me an email, steve@stevekiles. I am out this week, so I may be slow to respond, but we're going to launch another 12-week boot camp in March. You're more than welcome to send me an email, steve@stevekiles, KYLES.com,
Yep.
and we'll be happy to consider you as a candidate. There's only 20 spots. And I know there's a lot of people already registered, so I'd be happy to look at it.
Okay.
Um,
And we'll
so
give
there
that
you go.
person your email
Yep.
address.
Yep.
Okay. Can you give them a good refi script for cold calling?
Yeah, well, here's what I would say, 2 things. You don't need a cold call on refis. Number one is call your past client database. But if you don't have a past client database, call your current sphere of influence. And Carl, here's something we're seeing with massive success. Let me tell you this. For every client we've been running this for 4 weeks with several of the teams inside of my network here. And we're getting 18% of the conversations move into refi readies, which means they're ready for refinance once the market hits. They've completed the app, uploaded documents, and we've reviewed credit. And so here's what it is, Carl. We're offering what's called an annual mortgage review. And on the annual mortgage review, at the Loan Officer Leadership Podcast, I did 3 or 4 episodes that you'll see if somebody wants to go there, and we talk about the annual mortgage review. So I wouldn't do a refi script for cold calling. I would just say, hey, Carl, this is Steve Kiles. I did your mortgage a couple years ago. First off, just want to thank you for being a great client of mine. One of the things of value we're adding to our clients is what we call an annual mortgage review. We've been able to save our clients 40 to 50% savings in their current mortgage just by reviewing a couple of things in a 30-minute refinance or a mortgage ready, annual mortgage review consultation. Hey, listen, I've got this afternoon at 2 or tomorrow at 2 available. Which time works best for you? And we're finding that 91% of the past clients we talk to book into an annual mortgage review. So it's literally shocking how
That's
many say,
simple.
yeah. And then what we do is in that annual mortgage review, we just look at their current mortgage, taxes, and insurance. And you'd be amazed how many haven't filed homesteads, how many have inflated insurance, how many escrow accounts are out of whack with their taxes. And 40 to 50% we're able to show, hey, look, if you do this, this, and this, you'll save money. And then you ask 3 questions at the end of it, and this is the gold. Are you planning to make any large purchases in the next 12 months? What's your current debt structure? Because we know the average American family has $96,000 in debt. And then how much equity do you currently have? The average homeowner has $274,000 in equity. So in asking those 3 things at the end of the annual mortgage review, we're able to see, hey, look, a refinance may make sense. Let's do this. Let's schedule another appointment where we can do what we call a refi ready consultation. And that's where we go deeper into the numbers and see if a refinance makes sense. The people that book into the annual mortgage review, 18% of them go into refi ready. And it's been amazing, man. We're building this pipeline for when the refis hit. We're not going to be trying to get ready. We're already going to be ready.
Yep.
And then what's neat too is if you don't have past clients, you can do it with your sphere of influence. Hey, Carl, it's Steve. Hey, bro. I know we went to college a few years ago. You're like, I'm just playing, but hey, I know we hadn't talked in a while. I was thinking about you, man. I'm in the mortgage business, and one of the things we're doing for all of our clients is an annual mortgage review. We're helping our clients find like 40 to 50% of our clients right now are able to see savings. If you got a few minutes, I'd love to book you into an annual mortgage review. Although I didn't do your mortgage, I think I might be able to help you find savings. That's it. So
All right, got time for one last question before you get a bounce, and then I'll do a little quick wrap up. But Robert's got a question about if your process can help him scale up. He focuses on commercial, single family 1 to 4s, mixed use, and multifamily properties all the way up to funding.
yeah, can the process help you scale? Absolutely, because it's about outbound activity with the right people who can refer you business. So even in your 1 to 4, what you got to find out is who has the ability, who's the gatekeeper. In our industry, it tends to be realtors. And it may be commercial brokers, Robert. So the process to prospecting would still be the same. I call brokers on Mondays. I call clients in process Tuesdays, past clients on Wednesdays, and the people that are in process on Thursday. The process is exactly the same. Who your avatar is for the number one gatekeeper is what you got to look at. And I would assume it's a commercial brokers. So I'd be reaching out to commercial brokers to build relationships with them from 9 to 11 on Monday.
Yeah. Folks, Steve's got to jump for a 2 o'clock call. If you've got any other questions for him, you can send them over to us at marketing@admortgage.com. And then I've got a couple of quick things to tidy up the rest of the day. Steve, thank
It's a
you for
pleasure, my
your
friend.
amazing thing, and I'll
We'll
take us
catch you
home.
soon, man. Bye,
Yeah,
everybody. Thank y'all.
take us home. Eliana, can you put up our closing thoughts? All right. So again, thanks, Steve, for really great information. Hopefully that'll help a lot of folks close out some business. For us, we would think that one of the great ways you can close out some business is to work with us as your partner if you're not already. As I talked about a little earlier, we're structured to be very nimble and flexible, and we do that through what we're kind of calling our 4 pillars, which are our streamlined loan process. We try to make everything as fast and simple so we can get you guys to the closing table as quickly as we can. You have not heard from any of our account executives on this call, this webinar, but if you're working with us, you know that we've got a can-do attitude and that our folks are experts in pretty much any lending situation you can throw at them, whether it's non-QM, conventional, government, that we offer a wide range of loan products, and that we have the flexibility to change the underwriting, particularly in the non-QM space, and that we're sort of always monitoring the market to see what's out there that we can fill that niche with. And part of what we also do is broker education. And we do that through a series of webinars. Next slide. Sorry, we're going to help you save a little money right now. We are instituting for the next week. We've got a savings program in place where you can get 37.5 basis points off a non-QM. Particularly, it's got to be owner occupied, FICO scores above 680, and then loan limits up to about $1.5 million. So if you got folks in the market that fit that bill, give us a call. And then just close out, we've got a webinar a week from this Thursday. We're really excited about it. We've got 4 heavy hitters, seriously. We're bringing in the Crispins and the Cardis, who combined each have total of 85 plus years experience in the business. So we're looking at the mortgage industry through the generational perspective. We keep hearing millennials and Gen Z are the next round of home buyers, that there's going to be a silver tsunami coming with baby boomers. So we're getting you prepared to how do you talk to each of those generations, especially if you come from a different generation. I'm a Gen Xer. I have not the foggiest idea how I would close a loan with a Gen Zer. So Allie is going to give us a hand to help us understand what's going on in the world of Gen Z. Rob Crispin's son, Robbie, has a podcast aimed at millennials, so he's an expert there. Then Allie's mom is a mortgage lender over at Chase. She's a fellow Gen Xer, so she'll kind of tell you guys about what's going on with us. And then Rob, our veteran, is going to represent the baby boomers. Uh, I mean, he's a legend in this business, so we're really thrilled to have, kind of this multi-generational father-son, mother-daughter discussion. So we think it's going to be a fun conversation. So again, you can sign up for that on our website. We'll also send you a link in a follow-up email tomorrow. Then we have a monthly broker orientation at the beginning of March. That's usually for our new partners, but if you're an existing partner, you're welcome to join us and get a quick refresher course. And then we're going to be bringing in another industry veteran who's worked with us on a couple of occasions, Rick Sharga. He is the man of statistics. He's got a magic crystal ball, so he's going to help us take a look at the spring housing market like he did last year and the fall as well, and tell us where we think things are going. So with that, if you're not a partner, you can scan this QR code now, or you just wait for the presentation. Um, and hopefully you'll be joining us for our next couple of webinars. So with that, I know we're a few minutes over. There'll be a short 5-question survey at the end of this. So if you guys could just take a couple minutes, let us know how we did. If there's any topics you want to see us address in other future upcoming webinars, go ahead and give us that information, and we will be happy to kind of try to construct something and throw it on the calendar. So with that, again, I'm Carl Holman, Communications Manager at A&D Mortgage, wishing you guys all a great Tuesday. Hope you have a great rest of the week, and hopefully we will see you next Thursday at our Generations webinar. Have a great day, everybody. And thanks, Steve.